Hey folks, welcome back to Money and Politics. Thanks for joining me again, and it's good to have you all with me. I often forget to ask people to subscribe. Please subscribe if you haven't already, and comment. We're going to do analysis on what's going on in the big picture of the market, as well as what's going on specifically with some stocks and trends. Tonight, because this is the 80th anniversary of Pearl Harbor, I'm going to run out and hear a lecture in a bit, and a friend of mine is giving it. He is a former military historian. He is now with the Abraham Lincoln Presidential Library and Museum, and tonight's his last lecture, so I'm going to want to catch that. And so I'll keep this short, but today we did have a good bounce back in mode, which I had been telling people recently was a buying opportunity on weakness, and you see here's the 5-day chart. As you know, if you follow me, this is one of the strong stocks. I think it will grow for a number of years. And if we get some weakness, buy it. This is one of the companies, as I said last night, if we had things go wrong, if Putin goes into the Ukraine, if China did something really bad, I hope none of those things happen. But if things go south and InMode was to go down, then the way to play this on InMode or some other great stocks, but let me use this. This is where you want to have some cash. This is where you want to, strengthen your portfolio by being a little more defensive. We've been on a great run for a long time. And so now what you want to do is, think defensively somewhat. I always have one foot on the brake and one foot on the gas, and it's kind of like, how's the blend? It's not always 50-50. Sometimes I'm leveraged to the conservative side, and other times I'm, more going full out, but on the upside. And if we get a downturn on someone like InMode and it were to go down, that's when you want to buy. Now, in the spring, in March of, after COVID came out, in March of 2020, we had InMode go down, as I recall, to in the low 30s, and then adjusted because this did a 2-for-1 split on Halloween. So you're talking this one down to like $16. So you can see the amount of growth that we've had in a year and a half. You could have made a fortune. If this were to go down again and get pulled down, and this is why I say, unlike other people, they go, well, you don't want to have this volatility. I want volatility because if we have a stock that goes up and down or a market goes in town, it's when you buy at a very good price that you really are going to make the money down the road. When we were buying in March of 2020 and April of 2020, that's where we got the best price and the biggest bang for the buck. But you got to have some cash available. So this is where, if you aren't sitting on piles of cash with a bunch of free cash flow, this is why you want to, as a defensive investor, take some money off the table for your gains. Now, it doesn't mean that you got to close a position. It means that here and there you can take some off the table. If we look at InMode, and I'm just using InMode as an example for this lesson here. If we look at InMode, that back on, I got to lean in to see this price is so small, on November 16, so 3 weeks ago, it was at, my eyes. It's so small. $95, I think that said. When you guys see this on TV, it's much larger than what I'm seeing it. So $95, this is where you could have sold a couple of shares at $23. Actually, it was just the other day, it went down to 65 or so. So you could have sold a couple of shares when it went down to 65. You could have bought some of those back, even if it went lower. In other words, the point is you didn't know that was the low point. But this is where sometimes when it gets to be at a high, and if I can go back just a little more, see how it had been building for some time, and then we peaked out. So it had really been on a run. You see here we had a good jump right here, a sharp, and that was in October, what is that, 11th? So 11th it jumped up, and it went from, I apologize, 60, it's like so small type, it's hard for me to see it. But you can see, look at the chart here, you can see, and it goes up. And so you can see where it jumped there, and then it jumped again. So, you know, here and there you can sell a couple of shares. Maybe you sell 3 shares, maybe you sell 10 shares, depending on how many you have. Whatever, you get the idea. And if it goes down, you want those shares back, well, then buy them, and that way you still got cash. So, be defensive. One of the things, the lessons, and we look at the overall market today, and the overall market, came back because, the downturn isn't going to be as much. Tomorrow it might go down again. Who knows? We never know where the market's going to go from one day to the next. But today the S&P jumped 2%, the Dow jumped 1.4%, which is almost 500 points, $492 up on the Dow. The NASDAQ was up 461, which was a 3 percentage points gain in one day. And the thing I often say to you folks is the market is so volatile, it's so emotional, that this is where I want you all to have a sense of the market and to kind of be bulletproof. And this is where we want to know these tools. I, as you know, believe in the leveraged indexes, but I also want you to know that you have to be quick to pull back if we see something bad coming. So today, where the NASDAQ jumped 3%, you can see that the TQQQ went up 9%. Again, it's kind of pretty close to a 3-for-1. And if you look at this over the last year to date, you can see the great move. And if you look over the last 5 years, a humongous move. So if we get the downturn, and back here is where you had the downturn when COVID broke on that chart. So it did fall precipitously, but then it comes back. So, this is where, again, you want to have a sense and, kind of take your foot off the gas, sell a couple of shares here and there. And if we did get a downturn, you want to know, what am I going to do if we get a downturn and the market falls? I would say when the market goes down, and sometimes you don't want to jump in right away because you don't know where the bottom is. Sometimes going down in a market is like going down the stairs. It goes down and it's flat for a while and it drops and it goes and it drops. So there's an old saying on Wall Street, don't try to catch a falling knife. Wait until it hits the bottom and then bounces back up. And hopefully you don't have a false bottom. But when the market falls precipitously and you got your cash reserve, what are you going to buy? You want to have a list. The TQQQ is something I think you want to buy. The other thing is the leveraged version of the S&P 500, the UPRO. And these indexes, which are leveraged, are going to, after a downturn, going to come roaring back, as both the S&P and the NASDAQ have, and especially their leveraged indexes. The UPRO and the TQQQ. So the other thing is then in mode. In mode is another strength that you want to be buying. One that I've shared before, but I haven't talked about it as much as perhaps I should, is an exchange traded note. And that symbol is FNGU, Frank Nancy George Union. Up 9% today. Let's take a look. And we've got, you can see the volatility over the last year to date. Here's 1 year ago. So you're up, but this is where you gotta be, as an investor, willing to have that volatility, because this is where you're going to have better growth. Look on the right side here as we go down. I wanted you to see when you buy this is where you're getting these 10 great stocks. Most of them are great, not all of them what I have selected. But again, this is where you got Alibaba, you got Google, you got Amazon, Apple, Baidu. Baidu's a Chinese stock, as is Alibaba. You got Facebook, Nvidia, Tesla, and Twitter. All of that you get, each one equally weighted, 10% each, these 10 stocks, which make up 100%. And here you go. In the 52 weeks, this stock has had a low of $21.70 and a high of $50. So if you had bought it at the right time, and when was it at $21.70? And it was back close to the beginning of the year, I think, just as we entered. We had obviously these ups and downs, and $26 there. Back here you can see we entered at 21. So from the beginning up to February 15th, and that's right about the time Humbl topped, we had the markets up then. And so this is where, look at this chart. I want to point out, when you get these parabolic rises, these sharp rises, as compared to a gradual increase, when you get these sharp rises, those are almost never sustainable. So certainly that's where you don't know where they're going to top out, but take some money on a sharp rise off the table. So it came down, and then we did it again. And again, this is where, would I have gotten all out of this? No, I wouldn't, but I would have sold some as we went up sharply. And then if we do get another like mirror image, and you can see what I'm talking about with these raises, up and then almost like a mirror image down. Now this was not as sharp. You can see this change. It was a bit more gradual until we got here, and then it did go up. Now interestingly, it didn't fall off quite as much, but you can see. The other thing is, you get to know by following these stocks how they move, because it's just like different racehorses at the track. They all got their own personality. When we look at the TQQ, look at this chart that I have up here, and I want to compare it. And that's a one-year chart. Let me bring up the one-year chart for the TQQ that I just had. Not as many of you had ups and downs, because the market goes up and down. And again, this exacerbates it because it's a leveraged one. But it's not these typically parabolic jumps here, as we got on the FNGU. And this is a leveraged version, 3 times leveraged version of the FANG index. Now, real quick before we go, let's take a look. We had Zynex, which I think is going to be a winner going into 2022. You want to keep an eye on this. $12.70 up almost 6%, 44 cents. If we look at the last 6 months, but I think going forward, wouldn't it be great if we could have a chart looking into the future? I think going forward, this has a real good chance. I am not saying this is like I am not saying this is a no-brainer that it's going to grow. I am saying that, knowing the story on this, where they're adding a bunch of salespeople, this has a good opportunity for growth in the new year. And they have had, just quickly again to remind you, let me take myself out, and I'm going to look on the right-hand side down here. You can look at their revenue growth, the green, and the reason that their profit margins, they are making money, you can see, but the reason that their profit margins haven't grown as much, I think, is predominantly because of the cost of adding the salespeople, which is a big expense when you hire people. So I don't know if that's quite as clear of an overall message tonight. I'm just saying there's certain things you want to look at. Where we are right now, with all the international problems that are going on, as I illustrated last night, with an administration that I think has got in my estimation, and I think in the estimation of many others, bad energy policy. All of this could blow up in our face at some point. Now, if it does, you want to be prepared, A, ahead of time with cash, B, have a list of what you want to buy, and I gave you 3 tonight. In mode, the TQQQ, and the UPRO. So that's what you want to be looking at to buy. And someone asked me earlier in the day, I'm trying to remember, I just lost my train of thought. What would happen if we had a sharp downturn? What do I think would happen to Humbl? And I said, I think because Humbl is already so down over the last year, that I don't think Humbl is going to face a lot of downside. It could go down some, but it's not like it's going to go down to a nickel or something. You know, I mean, I think we're already, the downside here is, you know, is limited, and we've discussed this many times, you know, now that. By the way, the volume here is a little light, but I think it's somewhat limited on the downside of Humbl. And so, yes, if you want to buy some more, you know, I kind of think that a lot of you have a lot of Humbl, which is why I'm not necessarily telling you to go out and load up on Humbl, because I think you already have. Sometimes I get a letter from people and they've already have over 1 million shares, or it's amazing how many shares some of the people have. So folks, I would say that's pretty much my message for tonight. Again, if you want to send me a note, moneyandpoliticsnow@gmail.com, try to answer your questions. You can follow me on Twitter. And again, if you haven't subscribed, if you would, that would be great. Lastly, I did have the regulator who asked me if I would do an update on FUBO and INND. Not my favorite is IM, as in Mary, ND. The other is the hearing aid company, which I said I would. So I'll look to do an update on FUBO, which I think has a chance to be a breakout stock in 2022, and as Zynex could, and INND I just don't know. So I'm certainly not pounding the table on that one, but I will take a look at it. It's very cheap. Anyway, folks, thanks so much for joining me again. I hope you have a great evening, and we'll look to let's hope we can get a market that stays up for a while. Let's hope that we can get big growth on Humbl. And by the way, I meant to say this, something that we just haven't been talking about as much as I should, is forwardly. And forwardly jumped a small amount in dollars, but it was 11.85%, and at times today it was up 16%. So keep an eye on forwardly. Again, it was 1.2 million shares traded, so that's still out there, and we'll see what happens. I'm not pounding the table on that. I just wanted to mention it because it's so closely tied with Humbl. Anyway, thanks again for watching. We'll see you later.